Well, good morning, my Teaser King family. How's everybody today? So, per talking to um, Pat from Singapore yesterday, I did a little research on John Law. I'll show you a little video. And he was the first Keynesian. He would sit there and got the country off of gold and onto fiat currency. And he basically bankrupted France. This is like 1700. He bankrupts France, leads to Les Miserables, and we do get a good play out of it. And the moral of the story is you can never go off gold. The other thing was I was watching something on the Rothschilds and how they were using information, and the five brothers were in five different countries, and they'd relay messages like Napoleon, where they remind me of Soros a little bit, where Napoleon loses the war, so France loses. But what they start to do is act like France won, and they start selling bonds because France won in London. And then he does a trading places, Eddie Murphy, where then they start buying when the price goes down. So you got to watch market manipulation. This is why you have to understand everything. If you understand gold and physical gold, you don't go when the market drops. You buy when the market drops. You don't sell. Also went to my coin store yesterday. So Alyssa gave me a gold ring to get value and sell it. It was her ring. It was a small one, 10 karat. Had a real sapphire in it, but not good quality. She probably got it for $100 and it was worth 80. And I don't really question. I go to my guy, and well, but gold's 4,300. He says it was 3 grams, is what he gave us. And I don't know, it's 31 grams to an ounce. So it'd be 43.30 divided by 3 grams. So I don't know. But anyway, so he gave me $80. And I was like, okay, maybe I can get 100 somewhere else, but I'm not going to dick around. So then I gave her the money. We talked about gold and silver, and I'm still, he says a lot of gold businesses are going to go out of business when it goes back to 5,000 because people aren't buying at that rate. I says that's because people don't know it's a steal at 5,000. And then I told them there's 4 million tons of gold on the paper, and there's only 200,000 in physical. And so when they want physical, they won't get it, and they will pay for it. And so I said, I don't know why they go out. It's nothing different. It's just they're going to have to buy it for 5. So I think a lot of them bought it for 5,000. When it hit 5,500, people came in and sold, and they gave them 5,500. And now it's dropped to 4,000, and they're shitting in their pants. They're losing money on it. And all I can say is you're an idiot. If you would have done what I told you and bought it at 1,800 and kept it in the safe, then you'd be pulling out $1,800 gold and getting 4,300 instead of I bought it for 5. You can't play that game. You've got to play. You have to do what we've done is took advantage of the low price, $25 silver. So he's like buying it at 70 and then selling it instead of buying it all at 25 and now selling it at 75. So he, being a store, he didn't understand that even though I told him 100 times, this thanks for the paper price on the physical gold, went right over his head. So he's telling me they can't make money just selling jewelry, and the jewelry's very expensive and not really. He said this gold chain would sell for $16,000. And I said, well, I'll split it with you. You sell it for 16, you keep 8, and I'll keep 8. Well, I can't really get 16 for it, and just whatever. But he just doesn't get it. He trades the gold and silver doesn't realize the price is going up. So I bought an ounce of silver yesterday. I gave an ounce to the guy who helped me move. So I was an ounce. So I needed to get the ounce back. And he charged me $72. That's fine. It's like 70, almost 71 right now. I don't care. It'll be 1,000. And I told him, well, this is going to 1,000. But what he's doing is he's getting it at 70 and selling it at like 72. He doesn't get to hold it. Hold the 70 and let it run up to 500 and then start unraveling that. Instead, he just gets in, he'll get in silver, he'll pay 70 for it, and he'll sell it for 72 instead of keeping it and just holding it, selling a little. See, he needs to sell it because he can't sell his jewelry, so he's got to pay his bills and his employees. And so he's kind of missing the whole boat of having this opportunity in gold and silver instead of playing it as, well, I'll pay $5,000 for it and then sell it, for 6. Oh, it went down to 4,300. Well, you can thank JP Morgan for that, but where's all the gold that you were selling me at 17, 1,800? Where's all that? And so he keeps buying at market. So right now he would buy at 4,300. And then if it goes up to 47, he'd make money. But if it goes down to 4,000, he loses. He has no idea what he's doing. He should be buying it at 40. He should have kept half of what he bought at 17, 1,800. And now, and I'll start selling a little of it. That's why I say this is not stocks. This is not profit taking. You do not profit take your gold. I am not profit taking. I'm going to sell that ounce. And I'm not profit taking it. It's because I need cash and I'm only selling 1 ounce. That's it. That should buy me time for gold to get to 10,000. It should get me a year. And by the year, it should be 10. One of the other things from the Rothschild video was that how expensive wars are. And that the countries needed money. And basically what the Rothschilds did was they were selling gold and silver coins. And that's how they made their money back in the 1600s or 1700s. Well, right around Napoleon was like early 1800s. And these guys needed money, but they didn't want to pay tax on it. So they'd come to him and get gold and silver because that was real money. And they printed all these dollars that were worthless, and they needed the dollars to pay for the war. And of course, you lose money. The reason you lose money, anytime the government does anything, there's no revenue involved. Hitler was the only one that actually brought in revenue from the war by stealing the gold. But in most wars, Napoleon and Waterloo, right? That was French and the English, and then the English were fighting with the Russians, I guess, because Waterloo was in Russia, and it's very expensive. And maybe they were going after the oil. I mean, I don't know why they were in Russia, but probably going after the oil. But most wars, like look at this U.S. and Iran war, there's no revenue they're getting from it. Hey, Pat. How's everything? So John Law, we're about to talk about. He was the first Keynesian, got him off of gold onto money. We see how good that works. So I have a little video on it. but that's what he was. He basically printed all this money, and it's good until it is like Comex. It's good until everybody starts asking for the physical gold. Then it blows up, and that's how it was. It was good while nobody needed money, but as soon as they needed money, it blew up, and France went bankrupt because this idiot printed money and printed and printed, and it wasn't backed. He didn't back it by gold. They didn't want to give up the gold. So I will show that video. That's good. I'm ready to teach it. I was watching the Rothschild video, and I kind of stumbled on. I was watching a John Law video, and I didn't really like it. And then I rumbled onto some money video, and he starts off with John Law, and I said, "Okay, perfect. I'll show this." And that let's quickly show the gold price. So gold, we did not get the 10 o'clock drop, which is always a good day. We should see, we'll all see 4,400 today without the 10 o'clock drop. So we're at, notice at 10 o'clock, it went up and then a little bit at 10:30, and then it came back. So we will see 4,400 very soon. It does this when it didn't go down into the 42s. It stayed at the 43s, 43.20-ish, and then boom. Now the U.S. is finally buying it for the first time, and 43.58. Silver, we're not getting much movement on, 70.57, which I really can't understand, but at least we are 43.58 in gold. And so at 44, which I'm thinking today or tomorrow, I will then go to Ann Arbor and sell my 1 ounce Cougaran for 98%, 4,400-ish. I talked to my gold. I was at the gold store yesterday. I sold Alyssa's ring for her for $80. It was a 10 karat, very small, three. What do you call it? I don't know. It was a 3 weight, very small weight. 3. It was the British weight, not an ounce. It was whatever. And so we started talking, and I asked him about. I says, "You're not very competitive buying the gold back." I says, "You're 92 on a Cougaran. I can get 98 on a Cougaran." Well, we don't really need them. This I thought, I wasn't sure if he was being real or bullshitting, because he says, well, you know, I can't sell them, which I was like, what? So he says that they prefer the Eagle. You know, I said, okay, but the competitor is giving me 98%. So I'm going to sell it to him, and you're only 92%. You're missing 6%. You think you can't sell it? I guarantee you. I looked in his window. He didn't have anything. He had 2 small bars of gold. So I'm sitting there, and I'm like, you don't even have any. Well, I sold it this morning. I'm like, I got there. It was like 1 o'clock. It was after class. I got there, and he opens at 10 o'clock. And I was a little bit like, well, don't you want to have some gold now? He says he does have one big buyer who buys from him, who, comes in with 50,000, and he buys them 10 ounces or something. But I was like, I was shocked. I says, but you're not even going to get any Cougarans. Don't tell me you can't sell Cougarans. I says, you keep missing the boat. I mean, there's only 200,000 tons of gold and 4 million tons on COMEX. So when people need gold, there's not going to be any to have. And, he doesn't think long term, like, okay, save the Cougaran when it hits 5,000. He doesn't want to do that. He wants to get in the gold and sell it, make $100, and then he sells the premium. It's 200 over spot. Okay, well, I'm done buying pretty much. Now I'm just sitting waiting for everything to go up. I bought a lot in 5 years. It was my paycheck gold, So, I was a little surprised when he said, well, he doesn't really want the Cougaran. he's that. See, so I said, well, okay, I'm going to go sell it to this other guy at 98. Like, he obviously needs the gold. He's obviously selling the gold. The point these guys miss is that most of their customers are uneducated and see the price of gold go down, so they lose interest. And when it starts kicking back up, they'll come in and buy it. Believe me, in a month, when gold back to 4,800, he's going to be like, yeah, I could use that Cougar in now. Well, I was willing to sell it to you, but not at 92. That's ridiculous. Well, nobody wants it. Bullshit, nobody wants it. I came in and bought it because you're $70, $80 cheaper for Cougarans and Maple Leafs than Eagles. Why do you think it's only Eagles? It's gold. Gold is gold. It's all the same. An ounce of Cougaran, an ounce of Maple Leaf, and an ounce of Eagle are all equal. And of course, our Philharmonics, they're all equal. It doesn't matter. It really doesn't matter if it's a Cougaran or whatever it is. It's an ounce of gold. And it's, it's going to be $5,000. Why does it matter what it is? So that's the guy in Ann Arbor is 98% on all of them because he's like us. An ounce of gold's an ounce of gold. This guy is like dicking around. Well, nobody will buy it. And I'm like, I don't know about that. I bought it. I'm sure some of your customers, if you actually had anything in your case, would buy it. And that was the other thing. He didn't have anything in his case. So you're sitting there going, well, fuck, you don't even have any gold. He had two, I think, quarter ounce, like the Swiss bars, the little thin Swiss bars. He didn't have any coins. So I don't know what he's talking about. Anyway, so I again explained to him, look, you got 200,000 tons of gold and 4 million on paper, and you're looking at the paper price of the 4,300. And I'm looking at the physical price of 10 to 15,000. He says, well, not too many people think like you. I go, nobody thinks like me. I get that, but that doesn't mean I'm wrong. And you need to be explaining this to your customers. If you want to sell gold, he says he can't sell jewelry. So he's just dependent on his gold and silver sales to pay the rent and pay his employees. And now that the price dropped, people don't know what's going on, don't trust it. And so, as I was saying, the Rothschilds, they had 5 sons, and they were each in different countries. So they started a network. That's why Rothschild became so rich. And he had a guy looking at the Waterloo, at the war in Waterloo, Napoleon against the British and the Russians, and they would tell him who's winning. And so he would know who's winning. I guess they used carrier pigeon. And I was like, really? And he knew that the British won the war. And so he went to Britain and he started selling the bonds, and everybody panicked. And, oh, well, if Rothschild's selling, I'm going to sell too, because he knows. And it was a ploy. It was just like trading places. They sold, and then it hit a point, and then he started buying because he knew the French had lost, but he made it look like the French had won. It was a little bullshit like that the Rothschilds did. But that's where they got their fortune is really in gold and silver. They had gold and silver coins, and that's what they would sell to the elitists, and the royal people wanted those for quick transactions and not to pay tax. Sound familiar? And so that's really why they became rich. So gold is always the winner. All right. So let's show this, then we'll get to baseball. 43.57, 70.65 in silver. So John Law, interesting guy, a Keynesian. If he knows it, or he probably didn't know he was a Keynesian, but he is.
Most testosterone boosters fail men for one simple reason, and this is how to solve it with this natural testosterone.
The United States government.
Okay, so this is called Money Printing Explained on the Jay Martin Show. I'm not a big Jay Martin fan. Here's my comment. Laugh out loud, you're wrong. Inflation kills the value of the USD, not prices going up and down. We can't just create dollars that devalues it. Try another thesis. Now, I say that because he said this was my thesis, which he's stealing from me because I'm the one who always says the thesis. Okay, I think we'll watch the first 7 or 8 minutes when they talk about John Law. This guy really doesn't understand money, even though he's got this show about money. It's called Money Printing Explained. It's just a Ponzi scheme because if it's not backed by gold, it's worthless. You can print all you want. All right. So he's going to get into John Law right in the beginning.
Spends roughly $2 trillion per year more than it takes in. It runs entirely on borrowed money. So how exactly is that same country able to turn around and lend tens of billions of dollars to other nations? And the answer starts with a keyboard and it ends with the price of your groceries. Every week for the past month, the same questions keep coming up in the comments. Mainly, where does this money come from? And this is the question behind every headline you cannot quite explain. It is the question almost nobody in finance or Washington will answer plainly, but by the end of this video, you will understand the answer, full machine from top to bottom. And once you can see it, you can't unsee it. But first, a story, because the system that we live in under today is a more sophisticated version of a machine that was built 300 years ago. In 1716, France was broke. The old king, Louis XIV, had just died and left the country buried under a war debt it could never hope to repay. The treasury was empty. The economy was frozen. And into that desperation walked a Scotsman named John Law, a gambler, a charmer, a man who had once been sentenced to death for killing somebody in a duel and had to flee his own country to save his own life. Now, Law had an idea so seductive that the French government handed him the keys to the entire economy. And the idea was this: stop using gold as currency. Gold is heavy, gold is scarce, and there is never enough of it. Instead, let's create our own currency. Let the bank print paper money, paper that you can create as much of as you need whenever you need it. Now, for a while, it was magnificent. The paper money flooded France. Stock in John Law's companies went straight up, and ordinary people got rich overnight. In fact, the word millionaire was coined in Paris during these years to describe the people that got fabulously wealthy on John Law's paper money. So it worked right up until the moment when a few people got nervous about the quality of their paper money and asked to trade it back in for gold. Because here's the thing about money that you can create from nothing. It works perfectly as long as nobody asks for the real thing. But the second people start asking, the illusion collapses. And in 1720, it collapsed. The paper in France became worthless, and France was burned so badly it would not trust paper money or even the word bank for the better part of a century. Now, I want you to hold that story in the back of your mind, because the system that we live under today is a more sophisticated version of John Law's system, but we simply just...
So let's quickly recap. We'll get right back to it. At the end of the day, everybody wants gold because you can't inflate it. You can't print it. It's real money with a real value. And if you take dollars that are not backed by anything, which is what we have, it ends up being worthless. That's what Egon says all the time. Every time it's gone to zero. Rome, France, England, Germany, Zimbabwe, Venezuela, every time. Pakistan, Sri Lanka, a lot recently, Argentina. Every time it goes to zero because it doesn't have value, because it's not real. It's not backed by gold, which is the real asset. You're better off with the mantle card and everything else, like I say, or a Rolex. They are real. They have value, but not the dollar. You can't print 100 trillion of them and expect them to have value. So that's the whole gold lesson. So John Law was the first Keynesian, where we're gonna print money as much as we want and we'll all get rich but it's not worth anything. So the millionaires with the paper money were the Titanic. At the end of the day, they needed to go back into gold and silver. And that's why you don't get off of it. So this explains perfectly what we're doing now. You've got to buy gold because it won't lose. You can't inflate it. That's what I always say. You can't print gold and silver. That's why I say it. It always holds its value. But this bullshit Ponzi scheme, what do? You keep printing and printing and printing, and then what happens? Well, it doesn't have value because eventually people will want the real McCoy, which is gold and silver. We're just 5 steps ahead of the game. That's the thing at the gold store yesterday where I didn't understand the guy. Well, if I buy it for 5,000 and it goes down, I lose money on it. I'm like, you've got to buy. You should have been buying it at 1,700 when I've been buying it from you, and I told you to keep it in a safe, and you knew better than me. Yeah, well, now who knows? Who knows best? Father knows best. Well, thank you, Fat. I appreciate that. I try to teach it as if you're 10-year-olds who keep it simple, stupid. That's the thing I learned from Hiram Walker. Keep it simple, stupid. Keep it very so me and you are talking and we can both understand it. I hate like Rick Rule and I hate like Rickards and a lot of these Peter Schiff, God knows what he's talking about, and Mark McGuire when he gets into the rinse and wash cycles. I can't follow them. I got a master's on. I'm like, what the fuck are they talking about? But if you keep it in simple terms, then everybody can understand it. Anyway, so that's the key to it. That's why I don't like Bitcoin or crypto or any of the crypto. It's not backed by anything. And to say stablecoin will be backed by the dollar, but the dollar's not backed by anything, means it's worthless also. So do not get into stablecoin. Do not get into Bitcoin. Bitcoin's not backed by anything. Wars are very, very expensive. I'll show you a little bit of Rothschild video also. Wars are extremely expensive because you gotta pay. The biggest problem is you get the men, and back then they had horses. You need to feed the horses. You need to feed the men. You need to give them rifles and ammunition. And when they shoot, you need to get them more ammunition. But there's no revenue. It's all expense. Where's the revenue? Now, the revenue for Hitler was stealing the gold from the central banks in Czechoslovakia and Poland and France and everything else. That's how Hitler made it into a profitable war. But war itself is not profitable. The reason the U.S. wants war is they want to sell their defense missiles and tanks and everything else. They want to sell them. So we're in it to get a war so we can sell our defense contractor stuff. What kind of, well, it's a bad business because it's not a real business. Nobody, let's make tanks. Well, who's going to buy one? There's no demand for a tank. Well, we'll have a war and then they'll need tanks and planes and they'll need guns and bullets. So let's create a war so we can sell our goods, which is basically what they're doing. It's the most stupid thing I've ever heard of. There's no demand for military weapons without a war. So that's why we always have a war. Vietnam, Korea, Iraq, Iran, now this one, and let's have a war with Russia and all the BRICS players. Let's have a war with them because we don't want them going on gold. Because once it is, we're exposed and we lose. Once everybody asks for real money, you're fucked in the fiat system. And that's why the whole world's fucked in the fiat system. All their money will go to zero. And that's why I did tell my store guy about you, Pat, that you're in Singapore and it's like 8-hour lines to buy gold. And it kind of got him. He kind of was like, oh, really? And I said, if we had a physical price and we didn't use the stupid COMEX price. So if you're in Singapore and you leave it up to the supply demand of the people, gold would be over 10,000. Because if you're waiting 8 hours in line, you're more than happy to pay 5,000, 6,000, 7,000 for the gold. Because you have to be in it. And I know in Singapore, China, you're not getting in the stock market. You were in the housing market till it collapsed with Evergrande. So you can't be in real estate and you can't be in stocks. And you certainly don't want to be in bonds. So you're in the only place you can be. You're in the only lifeboat, which is what we're seeing, gold and silver. All right, let's look a little bit more of this.
Got better at hiding the gold problem. So let's get back to our question. Where does the money come from? Let me start at the very bottom because everything else is built on top of this. The United States government spends more than it collects in taxes. Not occasionally, every single year by
Every
a very
single
wide
month.
margin. In a typical year today, it spends roughly $2 trillion more than it takes in. So where does that missing $2 trillion come from? Let me tell you, they borrow it. The government covers the gap by selling IOUs. That's a treasury bond. A treasury bond is nothing more than a promise. Lend the government money today and it will pay you back later with interest. A 2-year bond pays you back in 2 years, a 10-year bond in 10. That is the whole product. For decades, these IOUs were considered the safest investment on earth because everybody assumed the US government always pays its debts. So the world lined up to buy them. Other governments, pension funds, banks, you and me. So that is the first answer. Where does the government's money come from? It borrows it by selling bonds, by selling IOUs. But that just moves the question back a step because now we have to ask, who buys the bonds and what happens if not enough people want to? And that is where this whole thing gets interesting. Now, the government does not sell its bonds on a website like eBay. It sells them at an auction, the same way you would sell a painting to whoever bids the highest. But here is the part that almost nobody knows. The government doesn't simply hope that enough buyers show up to buy its debt. It has a guaranteed list of buyers who are legally required to show up, and they are called the primary dealers. There's about 24 of them, 24 big banks and trading firms like JP Morgan and Goldman Sachs. In exchange for special access, each one of them is obligated to bid at every single treasury auction. These are the buyers of first resort. They are the reason the auction always clears, even on the days when real demand is weak. So picture the machine so far. The government needs money. It prints up a stack of IOUs and holds an auction. The primary dealers are forced to bid. So the auction clears. The government gets the money that it needs. Everybody gets to go home. But the dealers, those primary dealers, don't want to sit on all those bonds, all those IOUs. So they turn around and sell them again to everybody else, to Japan, to pension funds, to you. This reselling happens in what is called the secondary market. And the secondary market is where the real story lives. Now, here's the one rule you need to understand about this. And it is much simpler than Wall Street would like you to believe. When lots of people want to buy bonds, the price goes up and the interest rate actually goes down. When lots of people want to sell bonds, the price goes down, but the interest rate goes up. Price and interest rate move in opposite directions, always. Now, why is that the case? Think of it from the buyer's side. If a bond pays $50 a year in interest and I can buy it for $1,000, that's a 5% return. But if everybody's dumping that same bond and I can scoop it up for 80 cents on the dollar, so $800, I'm still getting my $50 per year payment, but on a smaller outlay. My return just jumped. The effective interest rate rose, not because the government offered more, but because the price of the asset fell and the payment remained the same. Now,
So why does the price fall? No demand. Now, one thing that I'm not sure of is he's saying that these banks have to buy the bonds. I don't believe that. I believe it's the secondary, the Chinese and the Japanese and these central banks and Saudi Arabia are the ones buying the bonds, because when they won't buy, what do you hear? The Federal Reserve buys the bonds. So I don't know about these banks buying the bonds, or maybe, but then they can't sell them. So the problem is nobody wants to buy the bonds. So JP Morgan might have to buy the bonds, but nobody wants to buy them from JP Morgan. And I can't imagine JP Morgan sitting on these bonds. So this is the problem. So the Federal Reserve is the one buying the bonds from the Treasury because we don't have enough money. And this is why they're like, oh, well, let's get stablecoin but let them buy the bonds. So they want to there's no demand for the bonds. So they figure, well, we'll have stablecoin buy the bonds, or we'll have stocks buy the bonds or something, because the government can't exist if they keep falling 2 billion down or 2 trillion down. How are they going to do it? And this is also, they print the money. They print the money to cover the 2 trillion. So I don't know what he's talking about when nobody, they get the money from selling the bonds until nobody wants the bonds. Then they print the money, which is very inflationary as you're printing money. But a lot of it is they're forced. So there's no supply and demand. There's no demand for the treasuries. When JP Morgan has to buy them, there's no demand. They have to buy them. They don't want them, so they try to sell them, and they sell them to the Fed. But they're printing money to buy the bonds. They're not just the banks are buying it. All right.
That up. When the world is predictable and everybody has confidence in the U.S. Treasury market, prices are high and the government borrows cheaply. But when holders start selling all at once to raise cash, maybe to buy oil on the open market, prices fall and the interest rate the government has to pay on its next round of borrowing climbs. The interest rate has a name. Wall Street calls it the yield, and the yield is the single most important number in the global economy. Now, here is a confusion that I see constantly, and it's worth clearing up. Most people think the Federal Reserve sets the interest rates, and it does, but only one of them. The Fed sets the overnight rate, the base rate, the rate banks charge each other to borrow for a single night from each other. And that is the rate you hear about on the news when the Fed cuts or hikes rates. But that is not the rate that sets your mortgage, your car loan, the rate your government pays to borrow for 30 years. Those track the long-term Treasury yields. And those yields are not set by the Fed. They are set by the market, by supply and demand, by buyers and sellers every second of every day. And that is why the Fed can cut its base rate and mortgages can go up anyway. The Fed controls the overnight rate, but the market controls the rate that actually runs your life. And when the world starts selling US bonds, the market drags that rate higher, no matter what the Fed wants. So now you understand the engine. The government borrows by auction. The primary dealers backstop the auction. The bonds trade in the secondary market, and supply and demand in that market set the price, the borrowing cost for the entire economy. There's just one problem. What happens when the selling gets so heavy that the yield climbs to a level that the government cannot afford? And this is where money is actually created. When real buyers will not show up at a price the government can live with, when the yield threatens to spiral, the Federal Reserve steps in and buys the bonds themselves, keeping price high and rates low. And the Fed does not buy them with money it earned or money it taxed or money it borrowed. It buys them with money it creates on the spot. Somebody at the Federal Reserve enters a number into a computer, and dollars that did not exist 1 second ago exist now. The Fed uses those brand new dollars to buy the bonds nobody else wants, which props the price back up and pushes the yield back down. There's no printing press. There's just a keyboard. That's all it takes. The primary dealers are the buyer of...
It is a printing press, moron. You're printing dollars out of thin air. That's what you do. I mean, you might use a keystroke, but that's printing dollars. We are using dollars and you are inflating them, and that loses value. And right now, nobody wants your treasuries because it's bullshit, because the dollar has no value. Why do I want it? Oh, and by the way, what he doesn't talk about is the $40 trillion debt. How are you going to pay that back? Oh, we're going to hit the button and then print $40 trillion. Why don't we do that? Because if we did it, the dollar would have no value. You can't do that. So basically, we are buying our own treasuries. We are inflating the money supply with a hit of a button. It doesn't matter. You're printing money to pay for it. At the end of the day, you're printing money. At the end of the day, if I use my credit card and go grocery shopping and spend $50, that's money. Yeah, I hit a button, but I owe money. I owe this. I pay with this. That's what I pay with. So like you get your paycheck, you don't actually get money, but you could go to the bank and give me $200. That's what I'm doing with my gold. I need cash. I need monopoly money. So I'm going to have to trade in an ounce of gold, and I'm going to get money for it. It's the same thing. So yeah, you might hit a button, but you're still paying, you're still printing more money, and it's inflationary, the money printing. All right. Well, another minute or two of this. This guy's okay. I don't love it. He doesn't really explain that well. And I thought he could have done more on John Law.
first resort. The Federal Reserve is the buyer of last resort, the one with an unlimited checkbook, because its checkbook is conjured from nothing. When you hear the term quantitative easing or QE, this is all it means. The Fed creating new money to buy the government's debt when the world will not do it. So now you have the full...
Oh, I thought they didn't create a debt. I guess they had to dare you.
Government's debt when the world will not do it. So now you have the full answer to where the money comes from. It comes from two places. The government borrows it by selling bonds, and when there are not enough buyers, the Fed creates it out of thin air and buys those bonds themselves. Now hold on to that, because we're about to watch the same trick do something that should not be possible. Here's a question that should stop you in your tracks. We just established that the United States borrows roughly $2 trillion per year because it does not have enough money. It needs the rest of the world to keep lending to it every quarter just to keep the lights on. So how exactly, if that's the case, is that same country able to turn around and lend tens of billions of dollars to other nations? Because that is what's been happening. Over the past 2 months, the United Arab Emirates and reportedly a whole string of Gulf and Asian countries have gone to Washington asking for emergency dollars for what is called a currency swap line, a short-term loan of dollars from one central bank to another. Now, how does a country that runs entirely on borrowed money suddenly become a lender? And the answer is the same keyboard. When the Fed extends a swap line, it does not dip into a vault. It does not pull the dollars from taxpayers. It's not lending money that it has. It's lending money that it creates. It types those dollars.
So it's again bullshit. That's what I don't like about it. It's bullshit because they are printing money to
French government bond trading.
They're printing money to loan out. So you don't have the money in the first place. The money's not worth anything. And let's say Ethiopia needs a loan because they need to buy oil because the oil price, thanks to your stupid war, has gone up. And that's what's happening. People are getting loans for the money, and I'm sure they don't pay it back. And so we're down even more, and our money is worthless. The problem is we're being the world's reserve currency. People come to the U.S. for it. And so it's more of not getting paid back. And again, if we're buying our own bonds, that's because there's no demand for the bonds, which means the bonds are worthless. Very simple. As I show you with the Canadian club bottle, nobody wants it. It's worthless. It's only worth something if somebody wants the Mantle card, the Canadian club, the gold, the silver. One thing that was a little mysterious yesterday is the guy said there's like 8 to 10 gold stores are about to go out of business because they can't afford, if gold goes up to 5,000, they can't afford to buy it. And I scratched my head going, but they're going to sell it for 6. I says, it's going to 10,000. Like, you don't get it, do you? You don't. I didn't say you don't listen to me, but I basically was saying it's going to keep going up. What are you talking about? it will go to, you know, $10,000 an ounce. So they should just keep buying and letting it go up. Yeah, it pulls back a little. That's why you buy it now. You should be buying it from me at 4,300. And then when it goes to 5,000, you have inventory to sell. You're all backwards. These people are the stupidest people in the world. So if me and Pat are running a gold store in Singapore, we're buying like shit right now. We're buying it at 4,300 all we can eat. Plus, we still have all that we bought at 1,500, 1,700, 2,000, which we're starting to sell, but we're smart enough to go, I'm not going to sell. If we're in the store right now, Pat, and we have this line for 8 hours, this price is not 4,300. You want it from me? I want 7,000. And that's the free market of what the gold really sells for. And you go, well, I can go to the other store and get it for 4,300. Go ahead. I'm not giving mine. I'm not selling mine at 4,300. It's too cheap. And I think this is the mistake these gold stores are making by selling it, by buying it at 5 and oops, it went down and I lost money on it. Well, what are you doing? You know it's going to 10. You should be buying inventory now. I think that's what the guy in Ann Arbor is doing. He's paying 98% for any of it. He knows it's going up. He's trying to get inventory cheap. My guy's too stupid to do that. My guy's saying, well, I'll lose money at 5,000. And I'm just scratching my head going, but when it goes to 10, you'll have bought it for 5. You got to take some and store it. You can't sell all of it. This is a unique item, gold. Gold and silver are going to 10. You can't treat it like chocolate cream pie where I get the pie in $1, I sell it for 2. This is the price is going to the moon. It's being corrupted by JP Morgan and it's being held down. But you can see it did go down to 4,060, but now it's back to 4,360. And we probably will see 4,400 today because I didn't see the 10 o'clock drop. I saw 10 o'clock go up, and that happens 1 in 100 days. And that means here we go. So that's what we have. All right. Anyway, so, you know, be careful. These gold stores, some of them will be going out, but the smart one, this guy should have been buying. He should pay me 98%. He should pay me over spot for my Cougarans. Any inventory he can get. He says, you know, well, we get, you don't have any in your counter. What are you talking about? You have no. So if I wanted to come in and buy gold now, I couldn't buy it because you don't have any. How is that business? Well, we sold all this. We sold this morning. What did you sell? 2 ounces, 3 ounces? You should be getting inventory of gold at 4,300 to sell at 5,000. What are you thinking? How are you? You're too stupid to be in business. So I don't know. I don't get it, but they can do what they want. I'll go to Ann Arbor and sell for 98%. Like I said, I'm only going to sell this 1 ounce, and that should take me a year. So I don't have after I sell this ounce, I'm not going to sell anymore for a long time. So I don't care, and I'll just watch it go up. But he's missing my guidance. I'm telling him I bought it 1,700, and it was not to sell at 2,000. It's not to sell at 4,000. It's not to sell at 10,000. It's to hold it because I get out of the dollar. I don't want to be in dollar. I don't want to sell it to be in dollars. All right. This one is the Rothschilds, how they built their empire. So I hope that was enough, Pat, on John Law. He basically was a Keynesian. So he basically took France off gold onto the dollar and basically collapsed France, created miserables and the French Revolution. And that's basically what happened. So it by having paper, and this is the whole problem, by having paper, you can go to war and you can be corrupt, print way more than you have. You can't, right? Gold, you can only print so much, or you can raise the price of gold and you can only print dollars based on the amount of gold you have, which is what you should do. But you know, people don't have, there's not that much gold to go around. So you can't make gold the thing. You have to convert it into paper and have the paper golds and then make the price of the gold be 20,000 an ounce, and then you can convert it, and then you can have more money and go to your little wars for no reason. So that's what happened to France. They inflated their money and they died. That's what happened to Rome. They took all their money out of the gold and silver and they died. And that's what happened to Amsterdam, the Dutch East India's company, and they died. And then the Spanish, and they died. And the British, and they died. The US, and they died. We're about to die because we printed money that isn't worth anything. And the gold we don't have. We have none in Fort Knox. If we do, it's bullshit. Okay, good, Pat. I don't know if the Rothschilds say something of it, but we'll learn here with the Rothschilds. There was a few good key things, but it's basically war is very expensive, and that's the problem. And so you keep printing the money, and then the money becomes worthless, but you need a lot of money, but there's no revenue. It's like when the government builds roads. They think, well, that'll get the economy going. No, it won't, because there's no revenue in building a road unless it's a toll road. It should be a private company that does it, but there's no value in government spending to build a road or a bridge because there's no revenue from it. You get no revenue in because it's just an expense. So how is that going to grow your economy? You can't. I mean, it's just stupid. This is what's happening right now. Well, this is exactly what's happening right now. They're making the dollar look good. The bond, this whole bond thing, there's no buyers for the bonds. This is what the guy doesn't say. And then my comment was, he then later says, well, prices will go up. And he calls that inflation. And again, another idiot who doesn't know what inflation is. This is tiring. Nobody knows what inflation is but us. It's incredible. There's a few that I've heard. I think Egon gets it, probably because he listened to me, but he's getting it where it's gold is, you can't print, can't lose its value. The dollar, you keep printing and it goes down in value, but prices going up are not inflation. They're the market. If everybody wants golf clubs, then the golf club price goes up. Got nothing to do with the dollar. And gold going up really has nothing to do with inflation. The inflation might create the demand for it. Oh, wait, the money's worthless, like what we're doing. Well, we can't stay in the money. The boat's sinking. We've hit the iceberg, the boat's sinking. So the only way we can get out of this, if the boat's sinking, is to get into gold and silver. But the price is going, so because of the boat sinking, we're in gold and silver because we know the inflation's here, but we know the inflation is the value of the dollar goes to zero. The fact you go to the grocery store and eggs and butter cost more, that's the market. Like I said, with the steak, it's $20 and it was on sale for $13 because nobody was buying it. And they'll go back to 20 and nobody will buy it and they'll be back on sale for 13. I don't know why stores do that. They should figure out what the market wants, what they're willing to pay for it, and that's what you sell it for. But when you're constantly having sales as Meijer and Target and Walmart do, it just shows you how stupid they are that they don't know the value. These Coke products at $2.99 and $3.63 at the meat grocery store, they're not in touch because they don't sell the Coke at $3. They sell it 2 for $5 because nobody buys it. It's expensive and it's Coke and it's terrible for you, the sugar and everything. All right, let's look at the Rothschilds for a little bit. Then we'll get into baseball. So the Rothschilds is some Jewish guy in Frankfurt, Germany, who is dabbling in gold and silver coins and stumbles into, oh, that's a good thing to do. Has 5 sons. They are in 5 different countries, and they contact each other with information of what's going on, and they're able to build wealth through that information. And they do talk about Napoleon, and wars are expensive, and they need money, and they borrow money from them, and they don't want to pay taxes. So they, again, don't have to pay tax if they borrow from Rothschild. So this is like mid to late 1700s, and then it gets into Napoleon, and then as we go. All right, this should be pretty good.
One family controls more wealth than most countries possess, influences the policies of major world governments, and has shaped global financial markets for over 250 years. Their name is synonymous with money itself, yet most people have no idea how their empire actually operates or the extent of their continuing influence over the global economy. The Rothschild family doesn't appear on Forbes's richest people lists because their wealth isn't held in publicly traded companies or measurable assets. It's embedded in the infrastructure of global finance itself: central banks, government bonds, commodity markets, and financial institutions that form the backbone of the international monetary system. We're talking about a financial empire worth an estimated $2 trillion, spread across hundreds of banks, investment funds, and commercial enterprises in every major economy on Earth. But the real power isn't in the money they own. It's in the money they control through financial institutions that manage the economic policies of entire nations. Here's what makes their story absolutely incredible. The Rothschilds didn't start wealthy. Meyer Amschel Rothschild began as a small-time coin dealer in Frankfurt's Jewish ghetto, dealing with local nobility who needed quick cash for their gambling debts. Within 2 generations, his 5 sons had established the most powerful banking network in Europe while financing both sides of every major war. By 1850, the Rothschild banks controlled more wealth than any government on Earth. They could make or break national currencies, determine which countries could borrow money for military campaigns, and influence the outcome of wars through strategic lending decisions. European governments needed Rothschild approval for major financial decisions. But here's what's truly staggering. They achieved this power without owning armies, controlling territory, or holding political office. They built an invisible empire based purely on financial leverage and information advantages that enabled them to manipulate markets, currencies, and governments while remaining largely hidden from public scrutiny. The Rothschild family pioneered techniques for international finance that seem normal today, but were revolutionary in the 18th century: cross-border banking, currency arbitrage, government bond trading, and central bank operations. They essentially invented modern international finance while using it to accumulate unprecedented wealth and influence. Their information network was more sophisticated than any government intelligence service. Using carrier pigeons, coded messages, and a network of agents throughout Europe, the Rothschilds knew about political developments, military movements, and economic changes before the governments involved. This information advantage enabled them to profit from events they sometimes helped orchestrate. The most famous example was the Battle of Waterloo, where Nathan Rothschild used advanced knowledge of Napoleon's defeat to manipulate British government bonds and make profits equivalent to billions of dollars today. But Waterloo was just one transaction in a systematic campaign to gain financial control over European governments. Today, Rothschild banks continue operating in major financial centers worldwide, managing investments for wealthy families, governments, and multinational corporations. They remain one of the world's most influential financial dynasties, while maintaining the privacy and discretion that has characterized their operations for centuries. This is the story of how a Jewish family from Frankfurt's ghetto became Europe's shadow government, how they built financial institutions that continue controlling global economic policies today, and how they've maintained extraordinary wealth and influence across 8 generations while remaining largely invisible to public oversight. What the Rothschilds accomplished wasn't just business success. It was the creation of financial power structures that transcend individual governments while establishing the template for how modern international finance operates behind the scenes of democratic institutions. To understand how the Rothschilds built their invisible empire, you need to understand what Europe looked like in 1744, when Meyer Amschel Rothschild was born in Frankfurt's Jewish quarter. A fragmented continent of dozens of independent states, constant warfare, primitive financial systems, and systematic persecution of Jewish communities who were excluded from most legitimate professions. The Holy Roman Empire was disintegrating into hundreds of competing territories ruled by princes, dukes, and electors who maintained their power through military force while chronically lacking the financial resources necessary to fund their armies, build infrastructure, or maintain governmental administration. European monarchs faced a fundamental problem. They needed constant access to large amounts of money for military campaigns, but they had no reliable methods for raising capital beyond taxation of already impoverished populations or confiscation of property.
So he just said it. Wars are very expensive. And how do you pay for them? Tax your people, not going to go over well. Or what we do is get off of the gold standard and print. We print the money to go to war, to sell our weapons for the defense contractors to make money, which I don't know how that helps anybody except for them. But this is the problem. Wars are very expensive. You shoot these Tomahawk missiles, you got 500 ounces of silver in them, number one, but you shoot them, nothing happens. And then the silver's gone, and now you need more silver to buy it, which is why they probably try to struggle to keep the silver price down, so they can keep making these missiles cheaper, I guess. But that's the problem. We're trying to create a demand that nobody wants for the defense contractors. So let's have wars. But they're very expensive, so we need fake money to keep printing it, not hitting a button. We print the money, and that's what hitting the button and printing the money is the same thing. So by printing the money, it then pays for the war, so we can go to war, so we can make money for the defense contractors. Seems really stupid, doesn't it? But that's what happens. And how we got the gold was we sold the weapons for gold from British in the 1930s for World War II, I believe, for them to fight the Nazis. We wanted gold for the weapons. So we gave them the weapons. They gave us the gold. That's where we got the gold from. But in most wars, that's not what's happening. You're coming out and printing your own money to pay for the wars, which are extremely expensive. And then it devalues your gold or inflates inflates your money. So it's worthless. So the money has no value because you've printed too much of it. Because if you print too much of it, it goes to zero. We're at zero now. And that's what these wars are really causing us to go bankrupt quicker. So we're in Ukraine giving them money that doesn't grow on trees. And then we're in war with Iran. And the kicker was the oil prices have went up, which idiot Trump didn't factor in. So we go to war and we think, oh, we'll just do what we did in Venezuela, take them out in a day. Oh, wait, Iran's ready for us with China and Russia, who want Iran to succeed. It's a BRICS member. Yeah, we're kind of fucked, aren't we? And so now we're trying to get away. And then Trump will say, well, they won't have a military. They won't have we won and we kept them from having a nuclear weapon. They never wanted a nuclear weapon. Iran never had a nuclear weapon and never wanted one. They're religious and they don't believe in using nuclear weapons to kill people. They don't really want to go to war. It's just like China. They don't want to go to war, and Russia doesn't want to go to war. Nobody wants to go to war. They want to do business. And the U.S. is broke because we do sanctions on people, so nobody wants our dollar. You kill the demand. And then you've got all this nobody wanting our treasuries. So we got to print money to buy our own treasuries. So this is where we're seeing the dollar has no value. Nobody wants it. Nobody wants the treasuries. Nobody wants our dollar. And that's the problem. That's how you know the dollar is worthless, because nobody wants it. Just like the Canadian Club bottle, my Hiram Walker or my Canadian Club whiskey. If I put it out for sale and nobody wants it, it's worthless. So the treasuries are what the U.S. is putting out there, and nobody wants it. So it's worthless. That's how you know the dollar's worthless. Is we can't sell our treasuries. Wouldn't everybody want it? Because the U.S. is always going to pay back. Only this time we're not going to pay back. We owe $40 trillion to the Germans and the Chinese and the Japanese and the British, and they're all going to get fucked because we're not going to pay any of them back because we can't. We don't have $40 trillion to pay back. And that's where you know the dollar's worthless. And that's why we buy more and more gold now, because we're getting near the end of the currency being around. Because again, if there's no demand, it's not worth anything and you don't have it. And that's why we go into gold and silver, because when we look around, what do we do? And these stores are stupid enough that we can sell. If you got 20,000 in dollars, you can trade it for gold. Now it might cost you a little bit more. Where I did it, it was 1,700, 1,800, and now it's going to cost you 43, 4,400. But that's it. I love how the guy charges $200 premium on gold, but he won't take. He wants to give you 92% on the other way, and I'm like, no, that's bad business. Don't you want inventory? You're not going to get. I told him yesterday, you're not going to get inventory. I'm going to go to somebody else to do that. Sorry about that. So this is the problem. That's what supply and demand means. It's always, is there a market to buy your supply? Whatever you're selling. If you're selling, towels, or you're selling pens, is there a market for it? If there is, then you can sell it, and then the market will tell you what you can sell it for. Yeah, I do want a pen, but I'll give you $2 for it. I want to sell it for $5. Not going to pay $5 for it. You have to sell it for what the market will do. All right, let's look at a little more Rothschild.
Of property from wealthy merchants who could relocate their assets to competing territories. Banking was primitive and fragmented, with most financial services provided by Italian merchants, German traders, or Jewish moneylenders who operated under severe legal restrictions that limited their activities while exposing them to arbitrary persecution and asset confiscation. International finance was essentially non-existent because currency systems varied between territories. Legal frameworks provided minimal protection for cross-border transactions, and communication systems were too slow and unreliable for coordinating complex financial operations across vast distances. But these limitations created extraordinary opportunities for anyone who could develop financial techniques that transcended local restrictions while providing services that European rulers desperately needed for their political and military ambitions. The Jewish community in Frankfurt existed under severe legal restrictions that excluded them from most guilds, professions, and commercial activities, while confining them to a cramped ghetto where hundreds of families lived in conditions that would be considered intolerable by contemporary standards. These restrictions, paradoxically, created advantages for financial innovation. Jewish families were forced to develop skills in currency exchange, international trade, and financial services that were essential for survival, while being excluded from traditional forms of wealth accumulation like land ownership or guild membership. Jewish communities also maintained international connections through religious and family networks that spanned European territories, providing access to information, credit relationships, and commercial opportunities that weren't available to Gentile merchants who operated within single political jurisdictions. Religious and cultural traditions emphasized education, literacy, and numerical skills that were essential for financial success while developing trust networks based on family relationships and religious obligations that could support complex commercial arrangements across vast distances. Mayer Amschel Rothschild's early life reflected both the constraints and opportunities that characterized Jewish existence in 18th century Europe. Born into a family that operated a small money-changing business, he received traditional Jewish education while learning commercial skills necessary for survival in a hostile environment. The death of his father when Meyer was 13 forced him to become an apprentice with the banking house of Wolf Jakob Oppenheimer in Hanover, where he learned international finance while developing connections with German nobility, who needed financial services for their political and military activities. This apprenticeship provided crucial insights into how European finance operated, while revealing the enormous opportunities available to anyone who could provide reliable banking services to rulers who were constantly struggling to fund their governmental and military expenses. Returning to Frankfurt in 1763, Meyer Amschel began building financial
Hey, John C.
relationships with local nobility while developing expertise in rare coin trading, currency exchange, and international commercial finance that would form the foundation for everything his family would accomplish. The political environment was ideal for financial innovation. The 7 Years' War, 1756 or 1763, had bankrupted most European governments, while demonstrating the crucial importance of reliable financing for military success. Rulers who could access credit could maintain armies that ensured their political survival. Economic development was accelerating throughout Europe, as agricultural improvements, population growth, and technological innovation created wealth that needed financial institutions for investment, protection, and international transfer.
So you notice how technology raises the level for everybody. So you have this tremendous poverty in the 1700s, and then all of a sudden technology starts taking up with the steam engine and stuff, transportation. You can sell food, and all of a sudden everything gets better. But again, what they need the army to protect their wealth, and the army is expensive because the army doesn't produce revenue unless you're Hitler and you steal somebody else's gold, which I'm sure happened to all the armies. But that's why. So you have this huge cost of an army. Well, wait, I don't have enough gold to do it. So this is really where the fiat system became is, well, there's only so much gold. Well, you need to raise the value of the gold, chuckleheads. And that's what they didn't do. And they didn't know how to value the gold. And that's the problem with gold. It should be 30, 40,000 an ounce. And then you'd have plenty of gold for everybody. But you keep it down, and then you have an army to protect it. It's really stupid. So that's the whole thing. And so I need money that I can just print more of to pay my army and to feed my people and get them jobs and, build technologies and things like that. So that's really what's happened. And look what we're doing now. We have all these wars. We have all this army. We have the defense contractors. And so what are we doing? We're trying to print more money to pay for everything. But what you don't realize is as you do it, and this has gone on since the Romans, as you print the money and it's not backed by gold and silver, it becomes worthless. And this is one thing they can't figure out. And I don't know why they've never let gold run. Gold should be 10, 20,000 an ounce. Then you'd have enough gold to do everything. And you come up with increments like we do now. There's a 10th of an ounce, a 20th of an ounce, I think a 30th of an ounce of gold, or a 25th of an ounce of gold. Well, that covers that. And then silver covers the nickel dime stuff. So that would cover it. And you just simply print dollars. This is gold back. So you don't actually need to carry the physical gold with you. You just need to have dollars backed by gold, but it can't be too much. And you can't have warmongers who want war. So the defense contractors who are paying him can sell their weapons, because without war, they can't sell their weapons. Probably shouldn't be in business. So anyway, John C., good morning. Well, I don't know. I haven't gotten to the Rockefellers, but the Rothschilds, and it goes back to they did gold and coins, and that's why they become wealthy. So again, the gold makes you wealthy, the paper makes you broke. And you need wars, you need armies to protect yourself so nobody comes and steals your gold. It's a warped world so let's have regular money, which is what the John Law did, was come out with regular money so you could print more to pay your military to protect your gold. And in Napoleon's case, again, I have to watch why Napoleon had to go to Russia and freeze like Hitler had to. Hitler went for the oil. We know that. Hitler went for the oil, and he wanted to take Moscow, and he thought if they took Moscow, then England wouldn't enter the war. And it really wasn't England that the problem. It was when the U.S. entered the war. But again, Hitler miscalculated. He thought the U.S. was weak because look at the Japanese invaded us at Pearl Harbor. So, well, we're the Nazis. Well, we make the Japs look like nothing. So that's what had happened there. All right.
Traditional banking was inadequate for these emerging requirements. Communication improvements were beginning to enable coordination of financial activities across greater distances, while still providing enormous advantages to anyone who could develop superior information networks for tracking
Why didn't they just use the internet? It would have solved a lot of their problems.
Political developments and market conditions. Most importantly for our story, European anti-Semitism created a peculiar situation where Jewish families were simultaneously excluded from most legitimate professions and uniquely positioned to provide financial services that Gentile merchants wouldn't offer. The combination of systematic persecution and specialized skills created incentives for Jewish families to develop financial techniques that were more sophisticated, reliable, and profitable than anything available from traditional banking institutions. Mayer Amschel's strategic insight was recognizing that European political fragmentation created opportunities for financial intermediaries who could operate across political boundaries while providing services to multiple competing governments simultaneously. Rather than choosing sides in European political conflicts, the Rothschilds would develop financial relationships with all sides while profiting from the conflicts themselves through lending, currency manipulation, and information advantages that enabled them to benefit regardless of political outcomes. This
sounds like J.P. Morgan. He World War I, he sold arms to both sides, and probably World War II, he sold arms to both sides. I know the U.S. sold all the tanks and weapons to Russia to fight the Nazis. J.P. Morgan, Ford was selling cars to the Nazis. So it's like a war is like business, and then I don't care which side I am. I just want to sell arms and tanks and Fords and stuff like that. So I don't care which side I'm on. I just want to make sales, and that's what the defense contractors are doing now. They don't care what side they sell their Tomahawk missiles to, as long as they sell them. It's insanity. All right.
approach required extraordinary diplomatic skills, sophisticated risk management, and financial techniques that could generate profits while maintaining neutrality in conflicts where choosing the wrong side could result in asset confiscation, exile, or execution. The strategy also required systematic development of information networks that could provide advance warning of political changes, military developments, and economic shifts that would affect the value of currencies, government bonds, and commercial investments. Most importantly, success required maintaining family unity and strategic coordination across generations while adapting to changing political conditions and technological developments that would reshape European finance over the following centuries. The foundation that Mayer Amschel established in Frankfurt would enable his 5 sons to build financial institutions in London, Paris, Vienna, Naples, and Frankfurt that would dominate European finance while establishing the template for modern international banking. Chapter 1. Frankfurt Origins Mayer. Amschel Rothschild's transformation from ghetto money changer to Europe's most influential financier began with a simple but revolutionary insight. European nobility were chronically short of cash, despite owning vast territories and commanding powerful armies, creating opportunities for anyone who could provide discreet, reliable financial services. Frankfurt's Jewish Quarter in the 1760s was a world of severe restrictions and desperate overcrowding, where 3,000 Jews were confined to a single street and forbidden from most commercial activities, political participation, or property ownership outside the ghetto walls. But these limitations paradoxically created advantages for financial innovation that Gentile merchants couldn't replicate. The legal restrictions that excluded Jews from guilds, agriculture, and manufacturing forced them to develop expertise in activities that required minimal physical assets, but maximum intellectual sophistication, currency exchange, international trade, and financial services that could generate income through knowledge rather than property ownership. Mayer Amschel's early business involved rare coin dealing, where he discovered that European nobility would pay premium prices for ancient coins that enhanced their prestige while demonstrating their cultural sophistication. Coin dealing provided entry into aristocratic circles that were otherwise inaccessible to Jewish merchants. But the real opportunity.
So they found a market, they found a demand, and because of what they had, they could make good money on it. It's the same story from the Romans on. You have to find a market and somebody will pay for it, and you figure out the price. And that's what they did. They found something that the market will bear. These aristocrats wanted these old coins. Oh, I'll get a bunch of old coins, sell them to them at a nice profit. I make money. They're happy. They get the coins. That's the key. Now, in the Roman days, it was probably togas and toga parties, goats and, animals. And the Appian Way was, what was that? It was just a big fair of you sold. This is like at Caesars, right? You go on into the mall with the sky. I mean, it's just stores, and people would buy what they needed, and the rich had money, so they could buy more of what they needed. So you had to sell things that the rich wanted, and it's very simple. And it's the same thing now. You sell to the rich because the poor don't have any money to buy your goods and services. But the rich do. So that's kind of why you always look to go to the rich, because they have the money to spend to buy what you need so you can make money. And then you then get more valuable because you're able to do that.
Came through understanding that nobles who collected expensive coins often needed immediate cash for gambling debts, military expenses, or political obligations. Mayer Amschel could provide discreet loans secured by valuable collections while charging interest rates that reflected both financial risk and the premium for confidentiality. Prince William IX of Hesse-Kassel became Mayer Amschel's most important early client, not because of coin collecting, but because of his need for financial services that could manage vast wealth accumulated through providing mercenary soldiers to other European powers, particularly Britain during the American Revolution. Prince William's mercenary business generated enormous cash flows that required sophisticated financial management for international currency conversion, investment in profitable securities, and discreet wealth preservation that avoided taxation or confiscation by competing political authorities. Mayer Amschel provided financial services that enabled Prince William to maximize returns on mercenary income, while maintaining liquidity for political and military requirements. These services required international connections, currency expertise, and investment knowledge that were unavailable from traditional banking institutions. The relationship with Prince William provided crucial lessons in international finance, while demonstrating the extraordinary profits available to financial intermediaries who could serve the complex requirements of European ruling elites. The prince's business generated annual profits exceeding 600,000 florins, equivalent to tens of millions of dollars today. But Mayer Amschel recognized that serving individual nobles, however wealthy, was limiting compared to opportunities in government finance, where entire countries needed funding for military campaigns and governmental operations. Government finance offered scale and security that private lending couldn't match. The American Revolution created unprecedented opportunities for government lending, as European powers required massive financing for military operations, while colonial disruptions created currency fluctuations and commercial dislocations that enabled enormous profits for sophisticated financial intermediaries. Mayer Amschel began facilitating international financial transactions for Prince William, while developing connections with British banking houses, French financiers, and other European money centers that could handle the scale and complexity of government finance during wartime conditions. The skills developed through serving Prince William, currency arbitrage, international fund transfers, government bond trading, and discreet wealth management provided the foundation for everything the Rothschild family would accomplish in international finance over the following centuries. Family strategy emphasized education and specialization, as Mayer Amschel trained his 5 sons in different aspects of international finance while maintaining coordinated approaches to complex transactions that required simultaneous operations in multiple European financial centers. Amschel Mayer, the eldest son, remained in Frankfurt to maintain relationships with German nobility and manage Central European operations. His expertise focused on currency exchange and commercial lending that served German states and Austrian territories. Salomon Mayer was positioned in Vienna to develop relationships with Austrian governmental officials and nobility who controlled Central European politics. Vienna's position as Habsburg imperial capital provided access to governmental finance opportunities throughout the Austrian Empire. Nathan Mayer was sent to London to establish relationships with British banking institutions and governmental authorities who controlled global trade finance and international currency markets. London was becoming Europe's dominant financial center with global commercial connections. Karl Mayer was positioned in Naples to develop relationships with Italian nobility and governmental authorities while managing Mediterranean trade finance. Naples provided access to Italian commercial networks and connections with North African and Eastern Mediterranean markets. James Mayer was sent to Paris to develop relationships with French governmental authorities and banking institutions. Paris was Europe's largest economy and provided access to continental European financial markets and governmental finance opportunities. The Five Brothers strategy enabled coordinated international operations while providing local expertise in each major European financial center. Family coordination enabled complex transactions that required simultaneous operations across multiple jurisdictions and currency systems. Communication systems were crucial for coordinated operations across vast distances. The Rothschild family developed courier networks, coded messaging systems, and information gathering capabilities that exceeded those available to most government intelligence services. Information advantages enabled profitable transactions through advanced knowledge of political developments, military outcomes, and economic changes that affected currency values, government bond prices, and commercial opportunities. Information was often more valuable than capital for generating extraordinary profits. Religious and cultural traditions provided additional advantages for international operations. Jewish communities throughout Europe maintained connections that could facilitate commercial relationships, while traditional Jewish education emphasized numerical skills and legal analysis essential for financial success. Marriage strategies reinforced family unity while expanding business connections through careful selection of spouses who brought additional commercial relationships, financial resources, or political connections that enhanced family business capabilities. The prohibition against intermarriage with Gentiles, while limiting social integration, provided protection against divided loyalties and external influences that might compromise family business strategies or reveal confidential information to competitors. Financial innovations included techniques for currency arbitrage that could generate profits from exchange rate differences between European monetary systems. Currency trading required sophisticated understanding of political and economic factors that influenced relative currency values. Government bond trading.
All right, let's get to baseball. It's a 2-hour video, and I don't want to share the 2 hours. We can do it over bits and pieces. All right, so let's go to baseball. Well, gold's sitting nicely, 43.57. Let's hope we can get to 4,500 soon. All right, let's get to baseball. I've already kind of analyzed it, but we'll go through it again. So let's look at yesterday's, and then we'll get into today's. So we start off Philly 8, Miami 2, and I did not play it because they had some weak pitching. So I really didn't get my pitchers I wanted. And Philly's pretty good. So Philly gets the win, no bet. Toronto beats Boston 6-1. Again, I don't play this one. I really don't trust Toronto or Boston too much. Washington 6, KC 4. I did play Washington here. We get the win 6-4. The free play, the White Sox under 8. New York wins 12-2. I was shocked as Dean Martin, who's a very good pitcher, had a rough outing against the Yankees. And that's the problem when you play the Yankees or the Dodgers. You got to be careful in those. So under 8, they had a big inning, is what killed us. Cincinnati wins 5-3 over the JETSs, but I have Cincinnati over 10. 2 weak pitchers, but only a 5-3, so they're not really hitting. Milwaukee 2, Cleveland 1. I normally play Milwaukee. I did play them, but I played them over 8. They can hit pretty well, and Cleveland held them to a 2-1 Milwaukee win, but it wasn't Mizorowski or the other pitcher, a weaker pitcher. St. Louis 3, San Diego 2. I do have St. Louis here, and I do win 3-2. Colorado 5, the Cubbies 2. I have Colorado over 9.5. The Cubbies forgot to hit against Lorenzen, which was shocking, and Colorado wins, so they get 7, but I don't get enough for the over. Minnesota 12, Texas 2. I did play Texas minus 123. The pitcher was hot, but not there. Detroit 2, Houston 4. I loved it, but I didn't play it because I didn't know who the pitcher was. Houston had somebody new, and Detroit had their pig Valdez going. He stinks. So Houston does win 4-2. So I was happy with that. Seattle 3, Baltimore 1. I don't play the game at all. Seattle does win. California 7, Arizona nothing. I don't play it. Again, I don't know what these teams are. I think Arizona is more of an under team. Pittsburgh 6, Oakland 5. We do win with this. Pitt. We have Pitt minus over 11. It's a push. So Pitt 6-5, and we have 11. And the Dodgers win 1-0, and we do play Tampa Bay under 8. So I was proud of that. So we end up going 4-5, and we lose 3 units yesterday. Not the best day, but we're only human. You know, this is the problem with the matchup. Some days we're going to bet Mizorowski. We're going to bet the other guy in Milwaukee. We're going to bet Scanes. We're going to bet this guy in Miami. We're going to bet Brown on the Cubs. And then some days you don't have anything. And then you're kind of guessing, or it's a bullpen day, or the guy with the 5 ERA throws a shutout. I've never seen so many guys with 5 ERAs throwing shutouts. So they give up 6 runs, 5-6 runs, and then 1 run, 2 runs, shutout. And that's what I'm trying to differentiate their overall ERA from their last 5 or 6 games ERA, which is pretty good. But we got caught a little bit. The Milwaukee game, the Colorado game, where the pitchers were giving up a lot. We got a game already started, Cincinnati and the Mets. Did I play this? No, I didn't play it. No score, top of second. Jesus, 1 o'clock. These 12:30 games. All right. 105, Washington, KC. I did play this one. Shit. All right. Let me do my email real quick. I got to send to my customers. All right, sorry about that. Again, my site's having difficulty loading up the game, so I have to email them. All right, so KC Washington, Avila against Littell, but the game's just about to start, so we won't get into that one. Philly over under 9.5. Philly 114. Alcantara against Painter. Painter is 1-10 his last 11 for Philly. Alcantara has been pitching a little bit better. He's won his last five. 6 innings, 6 runs, 5 innings, 8 runs, 7 innings, 3 runs, 7 innings, 1 run, 7 innings, 3. And so we know Painter's bad, and he gives up a lot of runs. So you either take Miami or you can take the game over. Houston under 8. Houston minus 107 and a total actually of 8.5. KC Mize for the Tigers. He's been injured, making his first start back. 2.3 ERA, and Jack Lambert for Houston, 3.47. Mize pretty good, pretty low runs. And Jack Lambert, last 5, he's doing up 6 innings, 5 runs, 5 innings, 3 runs, 5 innings, 2 runs, 5 innings, 1 run, 6 innings, 2 runs. So his last 5, he's only had in one game he gave up 4, one game he gave up 5. So he's been 3-2, 1-2. So pretty low. So let's I got another game for you for the free pick. St. Louis, San Diego. We got St. Louis minus 125, 10.5. I don't know how you get 10.5 in this game. B. Rodriguez, who's a bullpen guy, I believe. Bradley Rodriguez from Venezuela. Oh my God. And he's a bullpen guy, so there's not much we can look at there. St. Louis with Lehigh. His last 5, 6 innings of runs, 5 innings, 5 runs, 4 innings, 1 run, 4 innings, 3 runs, 5 innings, 4 runs. So 3 of those games, he's given up like 4 runs. We don't know. Rodriguez to the bullpen. The 10.5 seems very high. I would think that will never get there. Tampa Bay and the Dodgers. We've got the Dodgers 151-7. McClanahan against Shotani. McClanahan 3.23. But I noticed his last 5, he gave up 5 runs, 5 hits, 5 innings, 4 runs, 5 innings, 3 runs, 5 innings, 1 run, and then 5 innings, 4 runs, 5 innings, 4 runs. So 3 out of the last 5, he gave up 4 runs, and he's facing the Dodgers. And then you got Shotani, who doesn't give up much, and I can't find his stat line. So he's minus 151-7 there. Okay, and then we got California and Arizona. Arizona minus 164-9. Aldeguerra with a 3 ERA. He's only pitched in 5 games, and 2 of them were 1-inning games. An inning and 2/3, he gives up 33 pitches. A 69 and 89, 1 inning for 8, and then 5 innings, 74. So he's given up 1 run, 2 runs, 0, 1, and 2. And the ones were in 1 innings. So in the 5 innings, he's given up a 2-run and a shutout. So we don't really have enough data on him. Let's see when these games are. KC Washington started, and Philadelphia, Miami started. Houston's at 2:10. Okay, so this is an early day here. I needed to send out the emails a little bit earlier, but that's okay. plenty of fish in the sea today. Toronto, Boston. Now here's your free play. Boston 125, 9.5. Go over in this game with Boston. 2 units. Scherzer with a 10.23 ERA, and he's just terrible. It's time to quit, Scherzer. 41 years old. He's lost his last 5, and he's given up in his last 5. 2 innings, 2 runs, 2 innings, 8 runs, 6 innings, 2 runs, 2 innings, 7 runs, 3 innings, 5 runs. Guy is just terrible. And Bennett, Colonel Bennett for Boston, pitched 3 games, and he's given up 5 innings, 1 run, 5 innings, 4 runs, 5 innings, 4 runs. And that's how we develop the over. It's in Boston. They should hit. They should get a lot of runs. Toronto can hit. Boston, okay, about hitting. Let's see, Boston's wonderful lineup. They got 5 hitters. 5 hitters, 4 bad hitters. So we'll go with that. So take Boston over. That's a 6:45 game. The White Sox and the Yankees again. We got Yankees minus 172 and 8.5. We got K for the White Sox, who's very good, and Rodon for the Yankees, who's pitching much better. So if you just looked at the ERAs, you might go over in the game. But when you dig into it, which is what makes time travel possible for us, K has won 1, 2, 3, 4, 5, 6 out of his last 7. So he's 6-1. And when we look at his last 5 innings, 1 run, 6 innings, 1 run, 5 innings, 1 run, 4 innings, 6 runs, 5 innings, 2 runs. So except Philadelphia, even the Dodgers, he only let up 2 runs. This guy does not give up a lot of runs. So his ERA is based on week 1, 8 runs, and then 4 runs, and then 3 runs. And then there's 6 runs, but most of them have been low scoring. And for the Yankees, Rodon, he's played in 6 games, so we'll just go through his list. 4 innings, 3 runs, 3 innings, 3 runs, 5 innings, 1 run, 6 innings, 1 run, 6 innings, 1 run, and then 6 innings, 3 runs. So you really have 2 pitchers that are very good, but the ERAs are misleading. So be careful on this. I don't see Rodon minus 173. K is a very good pitcher. And then they're both lefties. I'm noticing a lot more lefties pitching lately, and the total of 8.5. Normally, I love taking the White Sox over, but I don't love it here. 2 pretty good pitchers. The 49ers go to Atlanta, play the Falcons. We've got the Falcons minus 143 and 9. For the Niners, we got Robbie Ray, used to be in the Tigers, with the 4.44 ERA. But Robbie Ray's won his last 4. His last 5. 4 innings, 10 runs. 4 innings, 4 runs. 4 innings, 3 runs. 5 innings, 0. 5 innings, 5. This guy is not that. His ERA is what it says. And Atlanta, Richie with the 4.68 ERA. And he's only pitched in 6 games. And his ERA, 7 innings, 2, 5 innings, 3, 5 innings, 3, 4 innings, 1, 4 innings, 6, and then 5 innings, a shutout against the JETSs. So he's going to give you 5 innings. Robbie Ray gives up a lot of runs. Richie, probably a lot of runs. This should get over if these teams can hit, and I don't know if they can hit. We went Frisco over 9 the other day and yesterday, and the game got postponed or was suspended or something. We didn't get a full game. So we'll see. Cleveland and Milwaukee, a very good game. We got Milwaukee minus 121, 7.5. Gus Williams from the Seattle Supersonics, the guard. Actually, Gavin Williams, 3.35 ERA. And he lost 2 in a row, won 4 in a row, and then lost to the Yankees. his last 5, 6 innings, 2 runs, 8 innings shutout, 7 innings, 1 run, 5 innings, 3 runs, 5 innings, 4 runs. So lately could be getting tired a little bit, starting to give up a little bit more runs. And Sprout with Milwaukee, 5.71 ERA. And nothing in the stat line. Last 5, 4 innings, 3 runs, 4 innings, 3 runs, 4 innings, 5 runs, 5 innings, 3 runs, 6 innings, 1 run. So somebody needs to explain to me why you have 2 pitchers and you have a total of 7.5. Now, this is where I go over based on why is this game a 7.5? Doesn't make sense. Shotani in his game is he's it's 3:10 in LA. It's a noon game. He's a 7. You got Shotani and McClanahan's a 7. But yet this game, and Shotani's got a 107 ERA, and in this game you got a 5.7 and a 3.3, and you got a 7.5. So here's where we go over just based on. It sounds like a bullshit line. This isn't Mizorowski going. This is Sprout with the 5.71, and it looks real. Colorado against the Bears. The Cubbies are minus 184 and 10. We got Sullivan for Colorado, Sean Sullivan, Bo Nix is back up. He's only pitched 1 game, and that's it. He pitched 1 game, 3 innings, and no runs. So we get absolutely nothing from Sullivan. He's on Colorado against Assad for the Bears, backing up Jim McMahon, no doubt. And Assad, last 5, 1 inning, no runs, 3 innings, no runs, 2 innings, 1 run, 6 innings shutout, 6 innings shutout. So this guy gave up 2 innings, 6 runs to the Dodgers, which makes sense. And to the Phillies, he gave up 4 innings, 9 runs. He normally is a starter. He normally 80 pitches, 70, and then those 1 innings was a 7 and a 17. But otherwise, it's 41. Even the 2 innings was 39. And his last 2 games, 72 and 85. He went 6 innings. So he's fairly much better than you think. Assad, the 4.29 ERA is not really that accurate. Sullivan, we have 1 game, so we have nothing there. Baltimore and Seattle, we got Seattle minus 125, 7.5. We got Bradish for Baltimore, 4.32 ERA against George Kirby, 4.07 ERA. Bradish, do I have Bradish down here? I can't believe Dean Martin got spanked yesterday. So disappointing. The first time we've lost with Dean Martin all year. All right, so this is Bradish of Baltimore. Last 5 innings, 2 runs, 6 innings, 1 run, 7 innings, 1 run. And here's where it gets confusing. 4 innings, 5 runs, 4 innings, 5 runs his last 2 against Seattle and Toronto. So what do we do with this guy who's pretty good, and then those last 2 outings he sucks? And George Kirby, general, he's lost 4 out of his last 5. 5 innings, 6 runs, 6 innings, 5 runs, 5 innings, 4 runs, 4 innings, 5 runs, 6 innings, 3 runs. So at first he was 1-2-2-2-1, and now he's 6-5-4-5-3. So 2 different tails. So I think you got to like this game over. Bradish has been weak. Kirby does not. He gives up a lot of runs. And again, we have a 7.5. And it just makes those 2.4 ERAs, and you got a 7.5. So again, this is one I will tell you to go over on. Just like the Milwaukee one, it doesn't make sense. It's not Mizorowski pitching. I don't think AI can figure out these little quirks of the pitchers. So go Seattle, beat the Navy. Actually, I went over in the game. Pitt minus 120 in 10 against Oakland. Brandon Ashcraft for Pitt. And Ashcraft is 7 innings, 1 run, 6 innings, 1 run, 6 innings, 2 runs, 5 innings, 6 runs, 5 innings, 2 runs. 6 runs came against Atlanta. Now, Pitt we know hits, and Oakland we know hits at Softball City. So pretty good for Ashcraft. Chevalier from Connecticut won his last 4, lost 3 before that, and lost his last one. So he's actually 4-4, but he lost 3 and then turned it around, 1-4, and then just lost. Last 5, 6 innings, 1 run, 5 innings, 0, 5 innings, 2 runs, and then 5 innings, 5 runs, 4 innings, 7 runs. I can only think they're getting tired. It's a long season as what screws them up. So I think Pitt will hit a lot today, and Oakland probably gets some hits. We will see. Again, I'm trying to take the last 5. So what do I do? 0, 0, 0, 5, 5. Well, what do I count? So I'm kind of playing with this right now. So I'm looking at the last at 5-5, the last 2 games going, okay, this guy's losing it. He's tired. He's injured. They picked up how to hit him or something. And if it's 5-5 and then shutout, then I'm going to play the guy under, even though he could give up 5 or he could shut you out. And the last game, there is a doubleheader because the game got postponed or suspended yesterday. The 49er at Atlanta. Game 2 is Hauser from Total Recall, 5-5-4. Actually, I'm watching Total Recall, and I see Hauser, and I just laugh going, hey, he's a pitcher on the 49ers. Why don't I have a game fucking log? Okay, here we go. Hauser, 6 innings, 1 run, 4 innings, 3 runs, 3 innings, 4 runs, 4 innings, 3 runs, 4 innings, 3 runs. So he's going to give up some runs, Hauser. And then we've got so Atlanta's minus 121, 11.5 seems high. And they have that first game going. Holmes, I don't know. The guy was like baseball. Did he hit a home run? The guy's a pitcher. All right, last 5 there. They do that with Shotani. They don't give me his pitching. They give me his hitting, which I don't care about. Last 5, 6 innings shutout, 5 innings 2, 4 innings 3, 6 innings 2, 3 innings 3. Goes about 80 pitches. And again, something like this, you have to watch the first game because, who's hitting, what bullpen guys you got. If it's a close game, they'll put in their better bullpen guys. Are they available for game 2? 11.5 seems high, but we'll see. All right, so I gave you a couple of free plays. Boston over 9.5, I really like. And Seattle over 7.5, I really like. And that's baseball today. And we got the JETS is up 3-0, top of the 3rd. We got KC 1-0 over Washington in the top of the 2nd. And we've got Miami 2, Philadelphia 0, which is good because I got Philadelphia over 9. I couldn't trust Painter. I was this close to betting Miami because Painter's 1-10 his last 11. So it was either that, all Phillies scored a run, it's 2-1. So I looked at it and I go, they're going to score a ton on Painter, but Philly's really strong at home. So I looked at it like, let's go over. So I went over. I got Philly over 9, but Painter's terrible. But look at their other pitchers, right? We bet a ton on Sanchez and the other guy. There's two aces that we bet on. But here with this painter, you either bet Miami, or if you're scared, you bet it over. So I bet it over. But that's what happens. It's as I said, there's basically 10 teams. Each team has 10 teams. So you got your Sanchez team on Philly and the other team guy, and then you got your Painter team, and the Painter team sucks. He gives up a lot of runs. He's 1 in 10 his last. Well, the team's 1 in 10 when he's pitched the last 11. 2-2, Philly tied it up. So we're in the bottom of the first. We got 4 runs already, and our total is over 9. So there you go. Detroit Houston starts in a half hour at over 8.5. 107, 8.5. So anyway, so I did take Philly over, and I didn't play the Jets in Cincy. You never know with the Jets, but they're up 3-0. Nick Lodolo, he stinks. So it's really the pitcher determines what you really do with the game. If you got the ace, Mizorowski at Milwaukee, I'm betting Milwaukee. But you got some guy today. Who do we got today? A lot of these games are 2 o'clock, 3 o'clock. These West Coast games are at 3 o'clock. Arizona's at 3. So Milwaukee, you've got Sprout against Grant Williams. Grant Williams in Cleveland, 3.35, and Sprout with the 5.71. This isn't the same Milwaukee team we get when we're betting with Mizorowski or the other guy, Harrison. When you got those two pitching, that's the A Milwaukee team. Sprout is the Z Milwaukee team. So one team, as I'm showing you, can be an A team and can be an over team and can be an under team and can be a Z team. Depending on the pitcher, they could be all of those things. Mizorowski, it's under, or take Milwaukee. That's their A team. And Harrison, you get Sprout. There's no way this is an under. And can you even bet Milwaukee? So this is the Z Milwaukee team. So I'm coming. So I'm problem solving. So there's basically 5 different teams with different pitchers. Then you get your bullpen day, which is totally fucked because I have no read on the pitcher. So what do I do with them? So we will see. Anyway, so that's what Sprout is against Cleveland. Should be a good game. Cleveland has a pretty good bullpen. I think they got somebody injured. I don't know. Anyway, that's today. That's your baseball for today. So the Boston game is, I think, later. Boston's at 6:45, and Seattle, I think, is a night game. Seattle is 9:40, so we didn't miss that. Anyway, that's about it. So that's your baseball. Basketball's over. Hopefully, Winnebago was visiting Kareem Abdul-Jabbar to teach him a sky hook because God knows he needs that. What else? So we looked at the Rothschilds, and we're looking. So we're looking. What we see is every country needs a military to defend itself, right? And it's not a revenue; it's an expense. There's no revenue there unless you, like the Rothschilds were helping one guy who provided mercenaries. So he actually sold the army to the British and would make money with it. But most of them, what else were you going to do back in the 1700s? You might as well be in the militia. But that's the problem. And even the Romans, they had armies. and the Ottomans conquered Rome with their army. So you always have needed an army, but it's an expense. Where are you going to get the money to pay the army? You can't really tax. The whole idea of taxing is ridiculous anyway. But that's why you share the wealth, and then everybody kind of has their own little army. Okay, I'll hire 10 Russian mafia guys to protect me, and you hire 10 to protect you. So individually, you might do it, as opposed to the government, the defense contractors, and all that. And I think that's what it is. And that's really the problem. Is how do you defend yourself? Do you need an army? And how do you pay for the army? Well, we can't have gold. We need to print money. And so we print money, which is inflation, and the money is worthless. So you have to figure out how to be on the gold standard and have an army at the same time. Now, what the Romans did was they actually paid 1 ounce of gold to the military. That's what it was worth at the time. So you paid all the soldiers 1 ounce of gold, and that was it. But I'm sure they ran out of gold, and they started taking their gold and silver out of their money because they were running out. So that's really the dilemma. The dollar, you can't use the dollar and print it and print it and print it. You're going to go broke. That certainly doesn't work. But you can see where they came up with it. They came up with it as, well, we have gold, but if we keep giving it to the army, we end up where we don't have, we run out. So I think the only thing you can really do, what I would do, is come out with the money backed by gold and just raise the value of gold to like 10,000. So I can print all this redeemable in gold at a higher price. I think that's the only way you can do it. But that's why you don't see the gold standard that much. It's to pay for the military, because you need an army to protect your land and to protect your gold. And that's the point you have to figure out. So anyway, we did learn about John Law. He was the first Keynesian, getting off the gold and printing the money, and it didn't work. And he collapsed France, but it did bring the Les Miserables musical. That was about the French Revolution in the late 1700s. And Napoleon, I assume, went to Russia to get the oil, because he probably needed money or needed assets. So everybody wants to run to Russia for oil. And that's what the U.S. is trying to do. And that's the whole point of the Ukraine war, was to get the natural resources of Russia, and their oil and their gold and their silver and their diamonds. But Russia said, no thanks. They have their own army, which is expensive. And now you got Iran. But who's paying for the army? Here we go to war for Israel. We're in Russia. Ukraine went to war for us. The whole thing's stupid. Anyway, I think that's it. 2 hours. Have a good day. Any other questions or comments, please let me know. Please email me. Free play today, Boston and Seattle. And we'll take our last look at gold as we enjoy to see what's going on with it. And we've got, it's getting up there nicely. 43.62 at 130. So we're looking at, and we're not seeing this down day by the U.S. So we can finally, I think we finally broke it, and now I think we'll see 45 tomorrow. And again, it runs in streaks like everything else. So 43.62, very nice. It didn't go back down to 4,000 or 41, and now we'll see it go up. And the question is, when it gets so high, what are we doing? Are we then going to keep going down, or what? But I advise just to keep buying and buying and buying, because as we see, the dollar will be printed to zero to pay for the military. All right. Have a wonderful day. www.teaserking.com. I hope everybody's well. Enjoy. Go buy more gold and silver. Bye, bye, bye. All right. Take care, everybody.